results bleed out over a long time. My FinRev DGen account absolutely loves it. Loves
Yeah,
it. So,
and that's the
you
good
know,
that's the good thing of
I'm a bear now,
yeah.
Maurizio. I want
Just
blood. I
wait,
want
just
this thing to
yeah.
zero.
I know it's one of those things, right? When you cannot actually marry one system, so that's why having multiple system is a good idea. Because when one doesn't perform, the other one usually does. You know what I mean? But then make sure that you do have a system that is not correlated with the other one. You know what I mean? Like and then. So for instance, we do have FinRev. So FinRev is performing great now, right? Why? Because it's obviously going short, going hell. But we're still sort of doing manual trading in stuff that we think will have potential, and that's going shit. And then it's going to be a time that because obviously FinRev is going, if we get a correction, especially how quick of a correction are we going to get, FinRev might not perform as well, and then we'll perform better. You know what I mean? Like, and it all balances out at that time. So it's one of those things like having one system only is
Mm,
risky in a way. You know what I mean? It's like I
mm,
do have the spot, like in terms of what we do, we have the spot and with derivatives, and the derivatives is doing shit. Obviously, a spot we're mainly on cash, waiting to get positioned. Um, it's one of those things, man. You know what I mean? Like, yeah.
it
Morning,
really is.
guys.
So there's like the well, I suppose you could call it the trader's equation, even though I know that that's an Al Brooks specific thing. But it's like you've got to be able to either neutrally narrate what the market is actually doing without any of your biases so that you can get enough information to say, right,
Mm-hmm.
I believe that the market is in this phase or this behavior is being represented. And the best way to trade this type of behavior and sentiment and everything else is this type of system, you know?
Correct.
So
Correct.
a macro swing trading system, well, that's not what you want right now. It might be what you want in 3 months' time, but right now you want something different. So it would seem to me that like when trading ranges build and they get smaller and smaller and that volatility compressions, whether that's caused by scalpers being the main thing that are
Mm-hmm.
chomping at, so there's all kinds of systems. Now, I mentioned that. I'm going to post a YouTube video in the chat. So this is the meeting that James and Scott had Friday just gone. There's updates on trend in there, but at the start, Robot James Hodges, he lays out a pairs trading system. And this was a system that James traded himself when he worked for the bank. And this is, if you do it, yeah. So he gives you absolutely everything. Okay. We're not going to go into any detail about it today. There are no strings to this. There are no strings to this other than you've got to do the work. You've got to watch it. You've got to say, this is pairs trading. Okay. I'm going to set up a paper trade. Let's, uh, let's go for it.
Mm-hmm.
But yeah, some really, really interesting stuff. So, the point is, I think the point that we're getting to is, or the point that I've had to realize, because I decided to cut a few of my positions at the weekend. Some of them like had really lost the market structure, like PYR, Vulcan Forged, for example. There's a lot like that was so far. I was just okay. Or I took halvesies from a couple of other positions as well. And then I did put more into positions that I thought still had a chance, like Crow, for example, has been a standout winner for me. So I wasn't so savage with that. That frees up some capital for me, some gum dry powder, sorry.
Mm-hmm.
So yeah, now I got to think to myself, well, do I want to get into some scalping? Do I want to get into this? So anyway, we'll leave that there. It's not an interrogation of my mind. It's just the when the market changes, you have to also make these decisions as well. So a
Yeah, that's why remember a while back, right? If we go back and you guys can go and watch this the video that we did after the liquidation event on October, right?
Mhm.
I did say that 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 wasn't a single event like that by the deep event, you know what I mean? Then a couple of days after, we decided to close pretty much everything that we had.
Mm.
Massive event, man. You know, that wasn't something to take lightly. You know, you can go and watch it. Why? You know, and I think this is a reflection of what happened then. You know what I mean? Obviously, this is this is all reflections of all the stuff that has been happening since October 10th. It's a massive thing that happened, and it's still a lot of people unwinding. A lot of people got broke. A lot of market makers trying to make that money. I can see a lot of manipulation happening in the market. So there is a lot of shit going on, and I think that is a highly likelihood because of what we had on October, right? So when is that going to go over? That's the question, right? We're gonna go through. I have some views of it, but then
Yeah.
you can go and watch, those thoughts
Mm-mm.
on and why we decided to pretty much close everything. We're still in some stuff, right? Still that we do have high conviction with. So I don't mind buying lower, holding on spot, but then yeah, doesn't feel good when things just are, very, very, very going down massively, right? So yeah.
Very flat. Yeah.
Mm.
Okay. I'm going to be fairly swift because I think this is another interesting thing with the market here, right? It's like
Hmm.
my skills have gotten better at spotting evidence, but the
Hmm.
skill gap between me and you, which is massive, is your ability to process all of these pieces of evidence. So that kind of leads me into this, and I will go through this briefly so we get to you. You read Scott's emails, okay? He talks about the S&P, so you know that this is a piece of evidence that you need to keep your eye on. We are seeing the biggest pullback after what has been a pretty much straight shot up, and there
Hmm.
is this correlation between the S&P and Bitcoin, and also I believe that the S&P is a it's like a barometer for how much liquidity there is in the system, how much money are the Fed allowing. There's all kinds of these macroeconomic factors, and I'm not even going to pretend to understand
Mm.
anything about that nonsense, right? Bearish. Let's cut to the chase. That seems bearish,
But
okay?
not quite yet. Okay, so this is important, because you mentioned something about liquidity. So in order to be neutral, you have to realize that you're not being neutral of what you're saying at the moment. You're saying that like the S&P 500 is a reflection of liquidity, and not necessarily. Okay,
Hmm.
so that's the first thing that you could say. Okay, that's one of the possibilities. It could be a reflection of of liquidity, but also could be a reflection of market sentiment. Also could be a reflection of risk, right? And also could be a reflection of if people are willing to actually keep buying at these prices. So there's so many different things that I don't like to say this is a reflection of this. Yes, that's
Mm.
part of the equation, but that's not the whole thing. And that's why I like to keep always seeing all the possibilities and just wait which one is the highest one. Yes, liquidity could be at the top, but not necessarily is a reflection of. You know what I'm saying? Like that's kind of like,
Hmm.
yeah. So
Yeah,
if
that's
you keep thinking like that, you could pivot quickly and do shorts and do longs and do, you know what I mean? Like,
Mhm.
because yeah, I think as a trader, you need to be, unfortunately with the 100x club, we're finding the apps, like all this stuff that we're looking for. But at the end of the day, the trading, you could do really well just by not giving shit where the market is going, just reading what the market is going to do ahead and then go long and go short accordingly. And then that's it, grab your money and run. Don't care about those 100x coins or 10x or 5x or 1x. Just randomly start doing small stuff every
Mm.
single day, man. That's another mindset. So which one, you're gonna be okay with. So yeah.
All right, that's really good to sharpen those points up. Not as a tangent, but as a reminder for another day, we could do some kind of Twitter session or something, because you want to keep up with the foundational news. But again, there's so much of that, it's
Mm,
ridiculously overpowering. Okay, so the S&P that we had a look at, and then when we have a look at Bitcoin, I mean, if it gets down to 60, then that's a 51% uh, retrace. And that would be a pretty, like it wouldn't be a shocking pullback. Like it wouldn't be like, oh, I'm really shocked Bitcoin's pulled back that much, right? But 60 is still a long way. 60 is still a long way away. So let's look at kind of where we are. All right, so it's a 30% pullback. Well, I mean, if 30% in crypto upsets you, then you haven't been here long enough. Like this is like, well, okay, this is 30%. This is
yeah.
this is not really anything. But the EMAs I got some interest in. So, we've had a weekly close below the hello doggy,
Sorry.
below that below that 50-week EMA. And this breakdown of these EMAs, it's a process. We tend to get a few weeks where we're just kind of moving sidewards and testing it, and we've got no real answer. And then, we either lose it or it shoots up. So I'm imagining trying to be neutral from history rhyming, let's say, that we're probably going to be in some kind of range between,
Mm,
this green area and wherever the MA is. Because obviously the moving average will drop down lower over
mm-hmm,
time, as we
mm-hmm.
as we go on. So yeah, I'm not trying to be like, oh, this is going to happen. I'm trying to get away from that bullshit. So let's go with the percentages then. Straight shot up, 5%. Straight shot down, 5%. Move to the side, I think 90%. We're
Mm,
just going to be in this kind of choppy, bullshitty thing.
mm,
And I just want to show you this so then I can hand it straight over to you, right? This is a global liquidity index that just really focuses on these central banks, right?
mm-hmm.
And it looks nice and it's going down and everything, and it's a nice color, Maurizio, but I'm fucked if I know what to do with it. It's like you could move it around like this, you could be like, well, okay, then it went up a bit and we went up a bit. So liquidity is a hot topic. I just started looking into it a little bit more and then immediately discovered what a absolute endless hole of complicated that liquidity is.
Ah, fuck, man. Yeah, it is. It is. It is. It is. It is something that I don't understand, to be honest. You know what I mean? Like liquidity, in my view, liquidity is a lagging indicator. So the thing that you need to understand is, are you using a lagging or a leading indicator, and understand which one it is.
Mhm.
Like the dominance that we did speak.
Oh
We
yeah.
dominance basically is just lagging. It's just basically a reflection of what already happened in the market, right? What could be leading indicators? Leading indicators, support and resistance levels, right? Anticipating where the buyers might be or the
Hmm.
sellers might be at, and that's a leading indicator. For me, that one actually leads into liquidity. Yeah, because think about it from that perspective. Like if you look, let's go through the charts and start
Mm.
sort of painting that picture. But it's not an easy task, man. Like it is. All right, you guys see my screen now?
We can, yeah.
All right. Let's remove all this stuff. So let's go through. I don't know if you guys watched the video on Friday. So Friday, Friday looked horrible, man. Like I knew it that we were going to go down. You know what I mean? Like we knew that. So that was kind of on the cards. And I was actually aiming for this level here, right? For the 70 something level. Now, this is the stuff that is actually leading. Why? Because if you think about it from that perspective, there is a lot of traders looking at that level, right? And then they're going to decide if it's a good price or not price to actually to get in. That's it. At the end of the day, if you are able to understand how traders think, especially institutions that now, you know, they driving the market on Bitcoin, right? How they think, then you probably will have a higher chance of success, especially with small time frame stuff, right? Now with that being said, because everything is actually so driven by Bitcoin, this is the one that we're focusing on. And then once Bitcoin comes back up, then alts are going to start, recovering and all this sort of stuff. And then we can start looking for all those chances of recovering, right? We did took a trade here. We take some profit, but we didn't make any money at all, right? Technically, because I didn't move the stop loss, which is fine. But then at the end of the day, you have to look for those trades because those are the interesting trades, right? So that's what I want to sort of mention in terms of leading indicators, right? Why I think support and resistance or areas of interest are leading instead of lagging. So thinking from the perspective that if we're looking at that at this level here, and then there's a lot of buyers here, and these are consensus, like is everybody's thinking about buying at that level, and prices start going that way, then that's going to provide liquidity, and then the liquidity essentially is going to go up. So that's why I think liquidity is a lagging indicator. You know what I mean? So that's kind of my mind. I could be completely wrong, but that's one of the things that I don't quite understand yet of how to use it effectively. You know what I mean? So I don't use it. You know what I mean? That's kind of if I don't understand how to use it effectively, then I don't. So I hope that makes sense. Okay. So all right. So let's start with what I'm saying at the moment, right? So obviously on Friday, we mentioned that we had a possibility of coming down all the way down to these levels here, the 77 area. So where these levels, how do we draw these levels? And remember last week or the couple of weeks before, we did those doodles. You know what I mean? Like what were the options here? What were the options here? And we did have one here. Have a look, right? That was in the cards as well, okay? And I didn't have any sort of, I was sort of equal on everything, you know what I mean? Like, because obviously I didn't have a clear view that it's a lot of buying power here. Is this a buy the dip event? Is this a normal liquidation? And from this area, this is the liquidation that happened on October the 10th, the 11th of the 10th, give or take. That was significant, right? That was significant. So obviously, price would never be able to actually break that level, and we just keep grinding down and down and down and down. Okay. So the question is, where is this going to stop? Okay, right? That's kind of the question. Where is the grinding down is going to stop? Who is driven? Who is? How is this market is being driven by, and how we can perhaps anticipate if that's going to happen, or we just ride the trend in a way. So I just want to ask you guys, what do you think in terms of what do you think is going to happen with Bitcoin at these given levels before I give you my thesis or what I think about what's going to happen. So Jim, quick down to support. And let me ask you a question, Jim. What is support for you? What level is support? Is 76, 72? Support can be also be in 55. Support can be also 39. So the lowest I shown, so it's actually here, the 76. All right, the 78. All right, that's a support. Okay. Michael says 50, sideways impossible, down, close down to 70. Wow, double bottom, 76. Yeah, that could be an option. Right, we will be breaking out our 50 bounce, bear market. Okay, so we are all over the place. So that's fair, and this is where everybody's at the moment, right? No one has any freaking idea in terms of how many shorts are there in the market, right? So let's try to sort of figure out where these levels are coming from. And by the way, what I'm saying trying is because always the way that I, yeah, crystal ball time, exactly. So we don't have a crystal ball. No one freaking knows. No one knows where this is going to lead, but we might have some ideas of if we, if the price holds there and then we see a lot of buying stuff like that. So that gives an indication that might be that bottom, right? Or might be, so that's kind of what we're looking for. So we are sort of like detectives trying to gather evidence, right? And see, okay, my evidence is that if we, hold this level and we see liquidity coming in and we see this and we see that, then therefore that could be a thesis, right? So we're building that like that. That's kind of what I try to do on a single day, every single day. Okay. So let's start with the weekly, right? And let me just remove all this stuff. Okay. So let's start with the weekly from the macro perspective. So 3 weeks ago, Ian, remember that I mentioned that we just broke a structure.
You
Very
did.
important, right?
Hmm.
Very important stuff. So always, try to look for the market as a structural basis, right? Why structure is important because a lot of institutional traders trade on structure, right? They use the structure to actually fill their orders or stuff like that. So structure is a very, very important thing. From the weekly perspective, we started breaking structure here. That was on the first week of November, right?
Hmm.
Then we haven't been able to climb back at all, at all. You know what I mean? There hasn't been any buying, any, any, any important buying from this perspective, right? So we have to ask ourselves, okay, where is the next support, right? And that's where this level comes from. Like if you, from the weekly perspective, this here, now all the duels came back. All right. So from this perspective here, that was the all-time highs on March 2024. We broke that level, and that's been a strong support, right? So whenever a resistance becomes support, then whenever a resistance break, then becomes support, and then that's kind of what if you think about from the psychological effects of it, this is what people are willing to pay. People let's think about it like think about it from the perspective of a house, right? Like a house in the housing market, right? Let's say you go into an area, right? That is getting hot, and they're doing a lot of development, and they're doing probably shopping centers, stuff like that, and all of a sudden the price of a house is cheap, right? Let's say that 100K. I'm just making it up, right?
Okay.
And then 2 years down the road, right, you finish the shopping center, you have nice schools, stuff like that, and all of a sudden that house that you bought 100K is no longer appreciated in value 300K, right? So new buyers come in and say, oh shit, this is still cheap, right? Because it still has so much potential, right? So now people have accepted that 300K is the new base value according to the asset, the asset value, because there is infrastructure, there's nice schools, there's stuff like that, right? Same thing with Bitcoin, same thing with any asset, same thing with that, right? What is the people willing to accept as a new price? And that's basically the psychology of support and resistance, right? When we break that level, then you have people willing to pay 80K for this thing. And then all of a sudden, the price comes back down. And then, oh, it's back at 80K. Oh, it's cheap. We have a sale. Let's buy. And that's how support and resistance are being formed. All right. Simple. It's not that simple, right? Easy said than done. But
Mm.
but then, think about it from that perspective, right? And that happens on any single asset. So from that perspective, where are we at? That's why that level is very important. Like I'm really, this is the line of the sand for me for starting the bearish conditions, like horrible bearish. And horrible bearish, what it will look like. Horrible bearish will be, let's go with the worst case scenario, right? Horrible bearish the next area of interest will be here, right?
Mm.
And the next area of interest, right, will be fucking here, give or take, right?
Mm-hmm.
So these are all possibilities. I'm not saying that we're going to go all the way down to 30 something, but this is what people are willing to pay for an asset. Think about it from that perspective, right? So if no one is willing, that's why on Friday, when I saw this breakdown, so on Friday, that would be, I don't know if you guys took the short. I just mentioned that it was a good idea to take the short. I didn't take it anyway, personally, because with shorts, you have to be sort of there, or with any sort of short time trading, you need to be there. But this was the price on Friday. Where's Friday? That was the daily. Right here, Friday. Yeah, Thursday, Friday. I think the price was around here, right? And I did mention that this looked fucking horrible. Why? Because we just broke this level here, very important level, and that level was the yearly open. Okay, we just broke it, so there was a highly likelihood that we were going to come down to the next level down. We didn't get there, but it was a massive candle, but it was, massive. It liquidated pretty much a lot of people. Essentially, unfortunately, not liquidated, stopped us out on most of our trades on leverage. So obviously, huge candle down. Look at this, like in the we're looking in the CVD. I'll show you in the CVD and the open interest. All right,
Mm-hmm.
coming back to the macro stuff. So this is the line. Let me just delete all these things because that's no longer relevant.
As you're deleting them, is it relevant that we've had a slow grind up in price that we would see something similar to the downside rather than a violent downside?
That's an interesting question. I'm gonna challenge your mindset by doing something funny next. So let me show you something. Okay,
Mm-hmm.
this is something because sometimes you know, and this is something that we need. Like, if you wanna play both sides of the market, you need to learn to. That's why I don't do a lot of shorts because I do a lot of shorts, by the way, on my own account, but I don't post a lot of shorts because imagine if I put a lot of shorts. Sometimes I take a shorts for 10 minutes, or probably sometimes I take shorts for an hour or 2 hours or 3 hours, right? Why? Because I'm playing the market. I'm playing the very, very short term, right? I'm playing what I'm seeing. I'm playing the strength, what I'm seeing at the moment, right? But imagine if I put a short on Bitcoin, people might panic and say, hold on, why are you shorting Bitcoin? Is the trend is over? What the fuck are we doing? Like we're still long on spot and short on perps. It's gonna get really conflicting on those scenarios. You know what I mean? So that's why I don't post a lot of shorts. Let me know if you guys are interested on that, and that will be a different mindset. You know what I mean? Like so shorts are very fun, but they're very risky and but they're fun, man. And you know why I think they're fun? Because sometimes you might predict when people are willing to just pull the plug, and you take advantage of that, right? But sometimes
Mm.
it's very hard to predict where people are willing to buy. You know what I mean?
Mm.
So if you think about it from the psychological perspective, a lot of people will pull the plug because, oh, fuck, man, price is going down, and they pull the plug, right? They say, I'm out. Sometimes it's easier to actually predict that when is the next bull run or thing is going to come around. And you
Mm-hmm.
can have consistency with that. So it's, you know what I mean? So it's stuff that it's easier to predict in a way. Not easy, but, because you can actually, you have to, have your stop loss in places and things like that. Sometimes you get stopped out several times and then you get a very nice trade, things like that. So that's why, I don't post a lot of shorts there. But I did that mention on Friday that would be a really great idea. Now, think about it and what I want you to see, let me just turn this off, okay? So this is Bitcoin on the weekly, right? So if you're a bull, right? If you're bullish or you want to hold, if you think that Bitcoin is going to the moon, do you think this is a good area to buy or to sell or to go short?
That's a good question. I think it's a good area to buy if you've got a 5, 10 year time horizon. Outside of that, I don't think it's a good time to buy.
All
As for,
right.
as for shorting it, it's so close to such an important level that shorting it seems like we have to have a major event to happen.
So you mentioned that you have to have a major event on both scenarios, I believe.
Hmm.
Why? So always have a look for the two scenarios. But let me show you this. If you go to TradingView, by the way, and by the way, Black Friday is on. If you guys buy TradingView, I think it's like 60, 70% off. I think it's worth it if you do trading. If you don't do trading, then it's not worth it. But then, yeah, I think it's take advantage of the Black Fridays always to buy TradingView if you do it. Anyway, going back to this thing. With TradingView, you have this thing that's called inverted scale.
Hmm.
So inverted scale is basically flipping the chart. All right.
Okay.
So think about it from the perspective that let me just invert this. All right.
Hmm.
Psychology is a psychological mindfuck. Okay. Now, same chart inverted. What do you think it's gonna do? It's gonna go up or it's gonna go down. If you're bull, like if you're a person that always see the upside, this is a really great trick, right? Why? Because like what do you think about this? Do you think that's going to go up or do you think it's going to reverse?
Hmm. Okay, so if I think that it's going to pull back, then it's obviously going to do the opposite. When you invert
Exactly.
it, the price is going to go up.
So you mentioned something very, very important that you think, we are I need to figure out how to do this. You say that we're very close to the support, right?
Hmm.
And it's not worth shorting because of this. But think about it like I'm just fucking with your head, man, at the moment.
Yeah, this
and
is
and think about it from the perspective. Oh, where's my pen? Just lose my pen. Right here. Okay. If you were playing this chart as a bull mindset, if we do have a breakout, would it be wouldn't it be good to go long on that scenario?
yeah, for sure.
So if we do this, that wouldn't be a good short.
It would be a good short.
You know what I mean? So
Yeah.
that's the thing that I wanna put in your head
Hmm.
that not necessarily we need to stop here. Now, option number two, we bounce out of this level and then we start going down. So essentially, that would be a retracement, right?
Hmm.
Which happens very often in crypto. Okay.
Hmm.
So we have to be open for both possibilities. Like if you flip the chart, wouldn't you agree?
I do. Yeah, this is a fantastic thinking tool.
Because now I'm like if your mind is fully bullish, this is depends on your mindset, right? If you're fully bullish, right, then
Hmm.
flip it and then you say, well, I'll do the same thing. You know what I mean? This is what you have to think about when you go neutral. If you want to be really neutral to the markets, you need to have both possibilities. Now let's go back to the regular scale.
Yeah, make sure that you put that back or you'll drive
Yeah, I
yourself
know.
insane later in the day.
So now see how your mind flips. It is
Mm.
it is a, it is a mind fuck. It is a psychological tool that you will not you will your mind like this, and this is basically depends on your mind. Okay,
Hmm.
this is not because I could see both ways when when the chart is like this, but some
Hmm.
people don't have that trigger yet, especially if you only buy in spot. It's very hard to take your head around and say, oh, fuck, I'm going to short this thing, right? Because you're still biased to the upside. So how do you actually flip it? Just flip the chart, man, and you'll see a different picture. You know what I mean? Completely different picture than this. You know, so it depends on how you actually see it. This is a very, very nice mind fuck. So essentially, these are the two possibilities. Wouldn't you agree? We bounce here or we bounce there. So I do have another level that is important that it looks like we are holding, which is this level here, right? So there's a significant liquidity or significant buying or significant selling around this area here. That's where this candle stopped technically, right? So I can see that we might not get to the 76 level if this level is actually looked at good liquidity. You know, we can actually bounce from there. And why that level is good, let me just, from the market structure perspective, okay, this is a lower high. So a trend, you know, a trend is a series of lower highs. And what I mean as a lower high is this area here is higher than this area here. So either low, high of this, okay? And that's kind of a precedent of market behaviors of a trending sort of behavior. We do have the potential of a lower high right here. That's why this level is significant. You know what I mean? Like I can see that it was a lot of buying here, right? Now, can this become a lower high? Definitely. Can this break? Definitely. We are sort of in the middle. That's why I don't want to do any decisions until we have a clear direction to, you know, either go short or long. That doesn't. This is long term speaking. You know, I'm not saying that you can take advantage of the volatility of the market at the moment, but this is the potentials that I'm seeing. I could see a lower high forming here, and if let's say next week we have sort of like a positive buying, right? And next week technically is going to be the first week of December, right? Yes. Yeah, we're going to be in December.
Will be, yeah.
So that will be an interesting reaction, right? You know, you get now the people saying that the rally, the Santa rally, the seasonality around end of the quarter, a lot of different shit that it might play out or might not. Okay, so that's kind of where I'm at the moment. I'm in no man's land. I'm 50-50 on everything, man. I have to be completely honest, right? So because I'm not, don't know, man. Like you are in the middle of something. There's a lot of selling pressure. So when is that selling pressure is going to stop? We still think macro perspective. I'm still bullish. It hasn't actually broke the structure, right? If we go on a monthly, right? Let's go on a monthly on a higher time frame, right? So monthly still looks good. Higher high, higher high. Now, where is this month going to end? That's going to be significant as well. Okay, so that's kind of in a nutshell as a higher time frame, right? Good question, Darren. Darren, there is a lot of stuff about happening about the interest rates. You know, there is one piece of data that it's not, I think the jobs or the CPI, something like that, is not going to be released. So the data, the Fed actually is going to, it has less information to actually make that decision. There is a lot of thought around, are they going to cut interest? Are they not? So that's going to create a lot of volatility in the market, right? So that's a guessing game. So I think the best way to play it is like not doing anything if you want to do the long-term game, right? Because from the spot perspective, we can actually perhaps might get better prices. I'm still thinking very long-term, Bitcoin is going to keep appreciating in value, right? But the problem is if we keep doing like leverage trades, we're going to fuck up. Like we're going to get stopped out several times before we actually catch that bottom. So obviously it already happened once. You don't want to, you know what I mean? Like there's several ways that you can actually trade. You want to catch the bottom, you want to catch the trend. I think it's less stressful to catch the trend, but we need to wait for that to happen, right? So yeah,
So
that's
on that monthly, it kind of boils down to, are we going to print a higher low or a lower high?
exactly right.
Okay.
Sorry, what was that again?
If we print a higher low, then that would be
Yes,
bullish. If we print a lower low,
yes,
then that would be bearish. And then that's the
yes,
main outcome that we're focused on for the monthly candle.
yes, but
But
there's always a but. That's what my wife says. There's always a but. Like you know, you're always fucking talking possibilities. Why don't you just fucking say just one thing and then that's it? And I say, all right. I always say yes, but yes, but anyway. So in order for us to know that it's a higher low, right? We need another month. You will
Uh,
not know, like just by one candle closing, you don't know if that's a good spot. Think about it from here, right? Get this low,
mhm,
1 month, then you get this one. Actually, this was a 3 month setup. See, one to
mhm,
3 month setup. Same thing here, right? 3 month setup, which is a quarter in a way, right?
mhm,
Think here, here, for instance, if kind of fuck us up in a way, right? That didn't play out. That you get this one, you get that one. That one has that one did have the potential higher low, but it didn't play it out, right? But it took 3 months or 2 months in order to form that, right? So from the macro perspective, you need more data. You need another candle. Okay, unfortunately, that if you play the long-term game, right? Now, can you preempt how they start going to form by looking at the weeklies and looking at the dailies? Yes, you can. That's what we're trying to actually do here. You know what I mean? Like we're trying to sort of see if the weekly is going to end up positively for the week and then so on and so forth. And then that's how you actually build your thesis. Okay. So have
mhm.
that in mind that you do need in order to have a confirm higher low, you need at least 2 months. So this one and December. Okay. So yeah, unfortunately, it is what it is, man. So yeah, did that make
Right.
sense?
Ye- yeah, I think so. It's so easy to fumble them. It's like the inside bar. You need a day with a higher high and a higher low.
Mm-hmm.
But yeah, okay,
Yeah,
okay.
because you do not have enough information from 1 month to
Hmm,
make that decision. You don't know if the next month is going to actually come back down. For
mhm,
instance, let's imagine that this month in December closes to like that, right?
okay.
Now, next month, this is a good indication. However, if next month closes above, then you do have a confirmed higher low from that perspective. But next month could actually break down. Then the
Mm,
whole higher low thesis is out of the window. You know what I mean?
gotcha.
So it's yeah, with patterns or price action depends on what you're looking at it. That's why I don't look at the month often, because it takes a long time. My mind is a very short time frame
Mm,
kind of mind. Some people have the capacity to actually look at the monthly and hold, but not me. I'm very impatient. So obviously weekly and daily that kind of is my
gotcha.
my right. So if we all right, so that was Bitcoin. Now let's have a look at the open interest and another thing that I'm watching. Okay. So check this out. Okay. All right. So that was the sort of wick down that we had on Friday, right? Now that sort of stopped and was a lot of buying power there. So who is driving this thing? So we do have a lot of spot coming through, right? Is that a
Mhm.
lot? Don't know. I don't, a lot. This is this was sort of why I decided to actually, go into some positions because I saw a lot of volume coming through. However, that volume sold off aggressively, man, aggressively. And this is the downside of, that's the type of market that we are. This is a session by session trading. Very hard to do a long-term positioning, very, very hard. So actually, if you do session by session, I think you could do well. Because obviously it's kind of easy to know where the session is going to head, like it's going based on this. But at some moment, especially on your session, New York either sells off or a lot of shorts get added, and then people on the spot side get forced to sell, and that's going to put a little pressure to the downside. Okay. So that's the behavior that we see in last week, right? Asia buys, New York fucking sells off, man. And and where is the sell-offs coming from? So the first evidence that I'm seeing is basically shorts being open. How do you know? And I've been saying this, if you guys, if the only downside of this strategy that you have to stay in and look at the chart for a long time. Jake, look at this. This is a very, very good setup. You start seeing the prices going low, then you start seeing the open interest are going high. What that means is a lot of shorts are being opened at this area. And on the back of that, you see a lot of CVD volume rolling down. What that means is a lot of selling pressure coming from shorts, forcing the spot buyers say, fuck, I'm out of here. I don't want to hold this position. And that basically forces the prices down, Now, where we are right now, once you have a liquidation, now you get a liquidation here, right? That liquidation basically is liquidating, is taking all the longs, people that actually went long, perhaps, I don't know, probably here, more than likely, right? Are just basically closing their positions or being forced to close their position. And now we are seeing new buyers coming through, right? At this level. Probably if I would be trading yesterday, which is a Sunday for me, I wouldn't be long in this thing, right? Been a bit long in this thing, but not for long. And this is kind of the stuff of scalping in a way, right? Like just basically why I'll be long in this, right? Stop loss very tight here. You can actually get the same risk reward of a monthly, trade or something like that, but you have to be watching the freaking market all day. So time versus money in a way. So you've seen a lot of CVD coming through supporting this level, right? And you start seeing open interest going down. What that means is more than likely, I'm not saying this is more than likely because you cannot actually know for sure what's going on with the open interest, but more than likely as the price goes up, if the open interest are going down, that means shorts are closing their positions. Okay. So when shorts close their positions, then the reaction is the other way around, right? Like if they start closing positions on the pressure of CVD buying, then therefore you do have a significant pullback. The problem is we're so down, right? That more than likely all these levels are very attractive for new shorts to come again and start shorting. You know what I mean? So why? Let me flip this. That's why the flipping is so great, man. Like, let me flip this, right? Let me flip this. Let me turn this off and let me bring it back to 1 hour, right? And this is the market that we are at the moment. Oh, fuck. Sorry. Oh, come on. All right. What do you see here? You see a trend. Would you agree that every time?
Obvious to an 8-year-old.
Obviously, yeah, but obviously because we just sort of flip it, right? So if you flip it back again, you don't see it the same way. You know what I mean? Like you do see a trend down, but if I flip it, right? you see a freaking trend, man. Like
Mm.
every time that the price, goes, like let's just start from here, the people start. If you're a buyer, you will be buying this, buying the dip, buying the dip. Now you're a seller. Like, I think about it from as a short,
Mm.
you're selling the dip, selling the dip,
Mm.
selling the dip, right? This is another trend right here, right? Check this
Mhm.
out. It's so fucking perfect, man. You know what I mean? But this is very small time frame stuff, man. You know what I mean? Like I cannot actually say where the price is going, but
Mm.
more than likely, if you think from the perspective, shorts are driving this market, man. As simple as that, right? Like, shorting here, shorting here, shorting here. You know what I mean? So obviously, if we want the market to recover, we need to start flipping all this short down. So we need that the market starts going all the way down here. Well, remember that I have this, Bitcoin chart inverse. So
Mhm.
I want you to think differently from that perspective. There is a lot of liquidity being built, huge trend. This is the hourly, man, huge trend. So when we start flipping, it's going to be a lot of resistance back and forward, back and forward, back and forward. So it's a lot of fucking around that's going to happen in the next couple of weeks. That's kind of what
Mhm.
I'm saying by looking at this analysis. You know what I mean? Like, yes, you can join the shorting game. So where will be the next place to short? Probably around here. Good short all the way up here. Things like that. You can scout the
Mhm.
market accordingly. But that's what I'm seeing, man. A lot of selling pressure. This could have continuation. Definitely, this could have continuation. So if you do, then do you want to pull the trigger and start shorting? But then if you haven't done it before, uh, I encourage you to learn it, to be honest, because obviously, showing is an intrinsic part of the market, and if you master it, I think that could be a really good way to take advantage of the markets, when they drop or when they go up. You know what I mean? So, but
Mhm.
it's a tough thing to do, to have a neutral mental statement, especially if you actually hold long-term portfolio. So I just do it with a little bit of cautious there. So yeah, that's kind of where I'm at with Bitcoin. Um, and obviously I'm only focusing on Bitcoin because obviously everything is following. And the interesting thing that I want to show you as well is what is it? Yeah, the treasuries, right? So we know that Bitcoin has been, we did mention this a while back when Bitcoin was going nuts, that one of the main drivers were the treasury companies, right? I think did Scott mention anything about this on Friday? I wasn't around to or not really.
Not in detail, no.
Okay, so you guys know this one, and you can actually figure out how many companies are underwater, right? In terms of what they bought, right? And what a treasury company does is obviously they raise money, right? They might do some product or whatever or platform. They raise money to actually buy more Bitcoin, or buy Ethereum, or buy Solana, or buy whatever, right? So
Mhm.
this and then obviously as the market goes up, because they're holding a lot of uh, assets on crypto, if the market goes up, essentially depends of what they like. There is this thing that is called MNAP, and you can actually read the definition of this. But in essence, what it is this is the value of the company. But it's not only what they hold in crypto, is what they hold on assets, buildings, employees, computers, debts, things like that, right? So if you believe that these companies, they do have some, so take them for instance, MicroStrategy, right? So MicroStrategy keep buying Bitcoin, keep buying Bitcoin, keep buying Bitcoin, but they do have a lot of other assets that they have done well with crypto, that they have done well with their own business model. So the MNAV is a really good value. It's a really good measure where all these companies are at the moment. So essentially, anything below one, technically, it looks like a cheap buy if you do believe in the company. But also could be seen as that the company could go down if the business model is not there. Is if it only relies on crypto to be successful, right?
Mhm.
Then this is what I think is driving the sell-offs. A lot of these companies are selling off a lot. You can actually see the MNAV pretty much going to shed on pretty much all these companies. These are all the companies, by the way. You can actually do more research on that. So this could be seen at two things, right? Either, you know, they are good value buys, especially not all of them, but probably have, for example, MicroStrategy could be a really good buy, right? And then they could use that cash that they have in stock to actually buy more crypto, and that creates a loop. Or you could see that a lot of these companies start sort of rolling over their crypto, and that's going to create a lot of more pressure. So we are at that level now, right? We are at the level that is these companies are going to hold the market or are going to fucking just smash it down, right? So that's kind of, unfortunately, I don't have an answer. I'm just, like I say, during the week I keep getting more data, more things, but that's kind of the market that we are. You know what I mean? Like I don't have any crystal ball, but I can see what can happen. So I'm just building my thesis around it, right? So yeah,
Mhm.
I think that's it, guys. I think that's pretty much the the interesting thing that I want to show you. Yeah, something to look into it.
Well, that was an awesome way to start the week. Thank you, Maurizio.
That's
Thank you,
fine, but
everybody.
we can perhaps open like we still have 2 minutes. I don't know if you guys have any questions or anything like that you want to go through or something.
Jim says inversion was screwing my head up. Yeah, I'm with you.
I know, man. I know. I wanna, I wanna, I wanted to. I want you to start looking at the market from both perspectives, not only one, man. Unfortunately, I think something that I want to do with 100x is actually creating more shorts, but I want to make sure that people understand why we take the shorts and how, that because we show the market, that doesn't mean that the market is going to go down fully. It may, but we're going to hold longs and shorts, and that screw up with people's head. You know what I mean? So
Mm.
obviously, probably we can start doing that in the future. But then, yeah. Uh,
All right, all right. Let's cut it off there then.
all right, guys.
Thank you,
Have an
everybody.
awesome day.
Have a
Bye bye.
great
Have a
week.
good one.
Ta-da.
Okay. Bye bye.